Hello, everybody. This is John Blank, and I am Zacks Chief Equity Strategist and Economist, and I am talking to you on Monday, February 23rd, 2026. And what we're talking about is the importance of the 16 Zacks equity sectors and the seven asset class ETF return sectors that we also look into. So what I'm going to do today is I'm going to go through the essence of how we do things versus S&P and how you can learn just using 2025 how what returns can tell us about investing in specific stocks and specific ETFs. And I'll give you some examples, lots of examples of how this works, how it works very well. Number one, I want to point out these are my views. I do have a PhD from MIT. They're not the views of Zacks as a company. Keep that in mind. So, number one, this is our classification system from a top-down perspective. So, of course, the economy, to the sectors, to the industries, to the stocks. And in the middle of that, of course, is these 16 sectors. You can see them, ZS1 all the way to 16. Now, we've also got ETF categories, 7 of those for balanced commodities, currencies, equities, fixed income, alternatives in this volatility sector. So keep this strategy at a top-down level in hand in these slides that I'm presenting to you for your use. So of course, S&P and us, we do consumer staples and discretionary. That is a similarity, but we're going to include retail and wholesale as a separate category. Now in industrials, there's typically one sector for S&P 500, but for us, we've got industrial products, construction, conglomerates, and business services and aerospace as the 5 sectors, not the one. So as of course, you can see that we've got 4 additional industrial sectors and 1 additional consumer sector. And with things like auto tires and trucks, as a cyclical part of this whole story for consumer discretionary as well. So there are similarities. We've got utilities, finance, oils and energy, computers and technology, of course, the big one for all of us these days. Just keep this in mind, 16 sectors, like I said, lots of smaller companies get included. S&P, 11 sectors, just large cap companies in those 11 sectors. So this is a more granular level of understanding, and it's going to give us these types of returns. So here are the top returns of 2025 in staples, for example. Here are the top returns in 2025 for consumer discretionary. And over here, we've got the year-to-date returns for 2026. So it's yearly returns and the market cap change, yearly returns and the market cap change. So of course, market cap change matters to returns just to show you that, some of these gain very little. They're so small cap, and some of them gained a whole lot in terms of market cap change. But what I want to focus on is the actual top tickers in these 8 sectors. So TDUP, WBD, W, LTM, CUID, and so on. So this is a noisy chart, but go back to it and pick tickers on and understand this a little later and learn from more tickers that I'm going to show you today. Now, here's the tickers I am going to show you today. First off, consumer staples, ThredUp, ticker TDUP. They provide the resale platforms online for women's and kids' apparels, for shoes, and for accessories. They're based in Oakland. So a great idea in an affordable market is to find a resale platform to sell things, like a garage sale kind of thing. ThredUp, consumer discretionary. The big name last year was Warner Brothers Discovery. Of course, Warner Brothers got sold to Netflix at the end of last year. We'll see if Paramount gets their act together and turns in a better bid. But at this point in time, we assume Netflix will buy Warner Brothers Discovery. That was a stock-specific game that turned out incredibly well for investors. Okay, Wayfair, ticker W. This is a retail wholesale name that did extremely well. So to keep that in mind. Now, transportation, we have LATAM Airlines, ticker LTM. This is, of course, down in Latin America. And so you might know that U.S. airlines struggled a bit with some of the turbulence created by the tariffing, but a lot of that business went down to Latin America. Similarly, in the tariffing business, China Yuchai International makes medium-duty diesel engines in China. So when China actually ramped up trade to the rest of the world after the U.S. trade war, it actually was one of the benefactors. Another really fascinating company, metals company, TMC. They make battery metals from those nodules that are found on the seafloors that have many different types of metals, polymetallic. So battery metals are a big thing right now in the world economy, and metals company is a name that would come up on our side. So as you can already see, we've got Warner Brothers and Wayfair as big major companies, but a lot of these names you have never heard of. And this is the help of this particular exercise. Is we're learning about what really was happening in the U.S. economy last year. Tutor Perini, diversified general contractor, a lot of industrial work getting done by these big names, ticker TPC. And finally, Cipher Mining, the industrial scale mining company. Now, a lot of Bitcoin mining was really strong. Even though the Bitcoin prices were falling apart, Bitcoin mining at these prices that are so high, even when they come down, still have been very profitable for a lot of these groups. And they have a data center, AI play that's baked into the miners. So keep the miners separate from Bitcoin in your mind. And that's another thing you're going to learn today. Now, again, we've got another 8 sectors to go through on the 2025 returns. And here are the names of those companies. So first off, EOS Enterprises, ticker EOSE. This is zinc battery storage systems, based, of course, in good old Edison, New Jersey, and Thomas Edison's still with us today in this amazing electrical world that we're living in. And zinc battery storage systems is a great idea. Planet Labs, satellite imagery and geospatial solutions. Planet Labs, an incredible business to think about. I love this one in finance. Iron Limited. They own and operate data centers powered by renewable energy. So how do they end up on finance? It's basically because they're Bitcoin miners. And the cloud service and power dense compute, this is a new nexus of activity. So like I said, you got to keep the Bitcoin miners is playing a role in this data center game. And then this one is interesting. It's out of Australia. They have the renewable energy with data centers. That's the big link up that's really powerful. In utilities, think outside the box. Go down to Brazil. A major Brazilian utility company, Copel, based in the state of Paraná and parts of Santa Catarina, is really doing strong and doing well as a company and a stock. Medical, Regencell Biosciences, ticker RGC. They're commercializing traditional Chinese medicine. So this is for ADHD and autism and other neuro disorders in your brain, basically. Chinese medicine is proven to be effective, and they're commercializing it. So centuries-old things that are making a new way into the biotechnology space. Grupo Cybest down in South America in Medellin, Colombia. So if you're looking for a name in the international space, which, by the way, has heated up this year, take a look at Grupo Cybest, ticker CIB. In aerospace, we've got Astronics, ticker ATRO. They specialize in lighting and electronics for the cockpit, cabin, and exteriors of military, commercial transport, and private jets. So this is just a great play to play both electronics and aeronautics and planes generally for all kinds of uses. And that's definitely a boom market right now. The world is getting more and more tight together with all these planes. And then finally, Bloom Energy. They generate and distribute renewable energy for all kinds of different customers. They're based in California out here in the United States. So on to another story is I want to look at the fundamentals of these top 16 sectors. Forward 12-month revenues here and forward 12-month earnings per share here. Again, noisy chart, but I want to get through the basics. Retailers, retail and wholesale. Look, it's very obvious. For 10, 12 years, the consumer has been holding up the U.S. economy. Keep that in mind. Tech is leading the way and is increasingly strengthened since the 2022. AI begins us with ChatGPT. You can see that right here. Tech and retail are leading the way and are spaces you want to find names in. Of course, down here a little bit lower, but perceptibly strong out of the 2020 period is financials. It's been a very favorable market for financials. And of course, we get confirmation, retail, consumer discretionary here, tech and financials here for earnings. So both revenues and earnings for retailers, tech and financials have been strong. That's the idea. Keep it in mind. All right, number 2, net margins. Consumer staples, retail again, tech, utilities, tech, and business services. Again, look at this nice return on investment capital for business services. Look at this incredible ramp up for tech. Look at this sweeping ramp up for retail. I mean, again, these are the markets that are making the money out there. And that's where you want to position your stocks. So the whole idea of top-down investing is to know the names, to know the sectors, and to know the stories at a fundamental level. That's all putting headwinds behind your name and giving you greater ability to win in the marketplace. All right, so earnings pureness, I just want to point out again, we're getting the retailers, again the tech, and again the financials down at earnings. So even if we get a little cleaner with the earnings, work tighter on what's in them, we're getting the same picture back. Those are the strong sectors. Then we've got long-term debt and equity, which I will skip, and we'll move on to other asset class returns. So in this space, I want to talk about the performance charts first of the 4 ETF asset classes: equities, metals, currencies, and commodities. So, of course, we get the Spider Gold shares here, and we got the Global X Copper shares here, and we've got Bloomberg Commodities here. So, again, amazing story of gold, copper, and generally they're baked into this Bloomberg index in the face of the Bitcoin prices collapsing. So I think this is one big story all integrated right now. Bitcoin prices and speculation and leverage and collapse, but the money poured into gold and silver and these commodity ETFs as a result of it. So I think this is one integrated story from last year, and we're going to probably see more of this and maybe more of this, but I would get also very worried about the volatility in gold and silver. So once again, we've got our 7 ETF classes: balance, commodities, currency, equities, fixed income, alternatives, and volatility. Noisy chart. Keep in mind, I'm looking at these annual returns, how they play out, and I want these top tickers in those spaces. So what do I learn? Outperformance in these areas. In the balance space, Gamco Natural Resources Gold and Income Trust. In commodities, ProShares Ultra Silver. So speculative, not only silver, but ultra silver. But silver and gold, clearly the big story last year. CoinShares Bitcoin Miners ETF. We talked about them in the specific event. So again, we're getting confirmation from ETFs to shares. The Bitcoin miners were hot last year. Gold miners 3x leverage. So yeah, we see that chart pushing the prices up. And again, a lot of it's been leveraged ETFs in the gold mining space and the gold space that are working, and the silver space. Ultra silver, not just silver. That's what's leverage. And then down here, efficient gold plus equity. So again, just maximizing the massive momentum run gold and silver had and playing this hand. Now, finally, I got this one. This was actually the most fascinating one I found. Go Timothy Plan International, TPIF. So I have a special slide for that, and I want to talk about TPIF, Timothy Plan International ETF. So it's an international ETF. It only has international stocks, large cap international stocks outside the US, so no US companies. And it's biblically responsible. So these are people who want international stock exposure, but they don't want to get in companies with business practices that conflict with Christian values and Christianity. So what does that mean for them? Strict screening process, and they exclude companies. So for example, no abortion companies or manufacture abortion products. No lifestyle companies that are involved in pornography. No addiction things, so no alcohol, tobacco, or gambling companies. And no human rights abusers that are in child labor or supporting terrorists. Honestly, gang, this is very smart stuff in the international space to have. Now, what's interesting also is in a smart beta play. So smart beta means waiting on the Victory International Volatility Weighted Index, which what basically it does is weighted index on their price stability rather than their size. So it's a smoother ride with less downside during turbulence. This is a big issue, volatility in the international market, and they're taking advantage of it, using this volatility-based thing to lower the volatility. Now you have 350 to 500 stocks across developed markets, Japan, the UK, Canada, France, and Switzerland. So they have performed best, and I really like the amount of thinking that's gone on here. So that should be no surprise. Not only has it got great returns this year and last year, but lower volatility, you should definitely look at the Timothy Plan International, TPIF. So, price and U.S. dollar changes, want to point out. Of course, here's our silver, platinum, palladium, and gold. They all moved up together, so this is clear speculation going on. I just wanted to point out, again, we're picking up on that speculative story last year for the 4 precious metals. Industrial metals, you can look for South copper, of course, going up, tin going up. It looks like aluminum, nickel, and zinc. It looks like a participation by basically all of them, but certainly led by the precious metals. So finally, we're going to get into the bonds to close this out. And I just want to point out, this is Moody's bond rating. This is Fitch bond rating. And this is really poorly rated C-level debt for Moody's or D-level debt for Fitch, going on to AAA for both Moody's and Fitch. And they have slightly different ways they do this, but the basic idea is anything above here is investment grade, anything above here is investment grade, and these are below investment grade. Here's the names of companies that are investment grade or not. Of course, Johnson & Johnson, Apple, Amazon, Berkshire, and Williams companies. These are the types of things that are investment grade bonds. So what we do here is we put together some effective yields and miscellaneous yields for all these different groups of indices, the high yield, the corporate bond is in particular. So I want to point out the high yield indices here are really been strong for 10 years, and it's been a very stable play. There's been no bond blowups, but it may not be the case all the time that high yield is the play. And again, here's again this double C's versus the B's and the triple B's, and the triple B's down here at 5% versus the really heavy speculation at 12.6%. There really has not been any reason. There's a lot more volatility in this than that, but eventually you get almost equity-like returns from high yield. So that's the story here, is that, again, this confirms what you already know. High yield has been paying well for some time. Here's your triple C's at 9% over here versus the 10-year bond down here at 2.76%. You know, an amazing difference in spreads and a lot of value being played for speculation. That kind of worries me heading into 2026. I think there's going to be a ring out. A lot of the speculation, the 3 ETFs, and got gold and silver and platinum and palladium, and then across the market in some of these areas, these small cap stocks that have been runs that don't have the business models. However, the business models of some of these are great, like IRA International, and you should know about them. And some of these ETFs are great, like Timothy Planet International. So that's the value of top-down thinking. I'm sure you came to this slide presentation, I had no idea what I was going to talk about or what the value was. And I hope I showed you learned something about investing that wasn't off the table and found in the newspapers from our very distinct top-down process of identifying shares and ETFs that are worth knowing about. Well, that's it for me. I hope you enjoyed this. And if you like this, you can get these slides from us at 866-794-6065, or send us an email at strategycall@zackspro.com. or find us on the web at zackspro.com. That's where you can get this information from us. And that's what I'd like to encourage all you to go ahead and do. Thank you.